with your Tuesday, July 9th morning wake-up call. We'll start off with the good to excellent ratings. They were expected to be steady for corn and beans, but each market saw a 1% increase. So corn is up 1% to 68. Beans are up 1% also at 68. Looking at the weather maps here, we see this morning that the rainfall totals from Beryl, as it moves through Illinois and Indiana, were increased. We now have totals of 2 to some areas near 4 inches of rain. And for the areas that Beryl moves through, these are areas that have said in the previous couple of weeks that they could actually use the rain. So this rainfall increase will generally be seen as positive news, as it is hitting some areas that did need rain. Also on morning maps, the heat in the forecast was reduced. A couple of days ago, temperatures were 15 to 20 degrees above average. As of this morning, most of the heat that is still out there is 7 degrees over average, up to maybe 12 in some areas. So yes, there is still heat. But one reason why trade is going to treat this as slightly bearish is because the heat is basically cut in half compared to the forecast mass we were seeing at the end of last week. And one more thing that really stands out here this morning, we had the Commitment of Traders report delayed until yesterday. So the new fund positions are this: that the funds sold 59,000 corn. They are now short 337,000. That is 99% of their record position. Over in beans, funds sold 11,000. They're now short 141,000. And in beans, they're short 82% of record. Now, going back to the corn real quick on this fund position, 99% of records suggest, yes, it is fair to assume funds may stop selling fairly soon. But they can go beyond record, of course. They can make a new record. In fact, just yesterday, they did appear to be sellers again. So they are likely at a new record. So we can assume that it will slow soon. What we cannot assume is that now that they're at 99% record, they're going to immediately turn around and short cover. With that size of a position, when they short cover, it will make a significant impact. But we can't immediately assume that just because they're at record shorts, they will instantly turn around and be buyers. Over in the cattle here, box beef neutral yesterday. The morning box beef was higher, but the afternoon was choice up 4 cents, select down 34 cents. So basically neutral there. National show list is plus 11,000. So slightly higher, but nothing extreme. The number that clearly stands out in cattle this week is that the futures are priced at the most cautious level they have been since December. Right now, assuming a normal basis, the futures are priced $7.50 under last week's average cash trade. That's obviously a highly significant number there, showing just how cautious they are. We had seen the futures price $2, $3, maybe even $4 under cash, but now they're $7.50. So still looks like the analysts calling for the box beef setback to start any day now. That still is apparently causing high amounts of caution in the cattle trade here. So we'll just see what we get for first bids. Packer profits are at 764. That's a fairly neutral number. So as always, we'll watch box beef every day, but keeping in mind that futures are priced already assuming a sizable setback in cash. If you have any questions, give me a call direct at 815-578-6159 and keep tuning in to our morning wake-up calls.